Let's get right into the strategy that allows you to take beautiful trades like this on a consistent basis in any market, in any time frame. But before that, quick service announcement. We have a new strategy ebook with 22 free trading strategies. It is for traders of any experience levels and any asset class and any time frame. So there is something there for everyone. If you want to get it, click the link below and let's go. So this is a strategy that I like to call BTFD, buy the dip. And that is exactly what we are doing here. We have three moving averages, as you can see, the 50, the 20, and the 10. And we use the stochastic as well with 11, 3, 3 in the settings. Now what we basically want is a pullback into the EMAs while we are trending nicely, together with the stochastic to be below 50 or 20 in an uptrend, and off we go. I will give you the entry criteria now step by step. So number one is we want to be in an established trend, or we want to have a consolidation breakout. In this case here, I would not say that this is an established trend at the time of our entry. However, we had this almost 5-year-long consolidation here on General Electric, which then broke out. So this is obviously a strong consolidation breakout. The next point is that we want to have the EMAs in correct order, and they can never cross. So if this pullback makes the 10 EMA, the black one, and the 20 EMA, the blue one, cross over, then I'm not trading this pullback, okay? Because that means the pullback is too deep or too prolonged, too long, and we are not having an edge here. Then we need price to pull back into the 10, the 20, or the 50 EMA. Sometimes you get really sharp pullbacks into the 50 EMA without the 10 and the 20 crossing over, and those are really great entries. Some of my favorite actually. But most of our trades we will take off the 20 and the 10 EMAs. Then what we need is a clean move of the stochastic from above 80 to below 50 or lower. Yeah? So you can see we are above 80 here. And then we need a clean move below the midline, or even better below the 20 line here for longs. And what do I mean by clean move? Well, this is a clean move. This is one. All of these are clean moves. This is a clean move. This is not a clean move, okay? So when stochastic goes like this is not something we want to trade. This is okay, this is okay. Even one hook like here is okay, or even good. This is okay, but anything else does not qualify, and we have to come from above 80 for longs, yeah? Otherwise, there is not enough room for our pullback to go when it starts to move, or we are simply not in a trending environment. The next thing we need is then a close back above the EMA 10, like here, ideally with a strong bullish close. Yeah, so this is a very strong bullish momentum bar. We close back above the EMA 10, but also above 1, 2, 3, 4, 5, 6 preceding candles, which is a very strong sign of trend continuation here. And at the same time, ideally together with the signal bar, we also get a reversal of the stochastic into bullish. So the blue line cuts back above the orange line, ideally with the signal bar. Sometimes it happens a bit later than the signal bar, maybe in this bar, and that is still fine, but you have to wait for this to happen. Ideally, we are not at the top of the pullback when we get in, and we still have a little bit of wiggle room, but sometimes that happens, and that is still okay. I'm only telling you about the perfect quality criteria trade. And this here for me is a AAA trade because everything lines up nicely. And then what we do is that we put our stop below the low of the pullback, and we trail our trade because we are trend followers here. We do not want to use take profits. We simply trail. So right now this trade here is sitting at a healthy 9.06 R up here, and I'm trailing behind the lows. So right now my stop would be sitting here. And if we get a strong close below the EMA 20, for example, that is a first indication that price is reversing here, but I'm not getting out just yet. I really want price to take me out down here. So worst case, I'm making 7.18 R on this trade. And you really do need these asymmetric risk reward trades with this strategy because your win rate is going to be below 50%. That is totally normal for trend following / pullback trading. Usually your win rate should be between 40 to 50%, but when we do win and we scale in, we can sometimes make 15, 20 R or more with a single pyramid. and it will make up for all the losses we take and more. So let's take a look at a short pyramid. So here we are on PASG with a nice daily downtrend. When we first got into this trade, you can see that it's already been swinging down for quite a while, nicely respecting at least the 50 EMA, and it is definitely worth a shot here with this clean stochastic pullback to the upside and this respect of the EMA 20 to try and get in on this trend. Now the first trade produced a -1, and that's totally fine. We are going to take losses with this. And then the second trade, you can see we pulled back above the 50, the EMAs never crossed. We are in a nice downtrend here, and that is our second try. Now this entry here, absolutely valid if you didn't take the first entry. However, this would be a scale in as we are already in the first one and we are not yet at break even. So the rule for taking scale ins is our first trade has to be at break even. Then when we get into this trade, we join our stops and manage those trades together. So if you missed the first entry or thought, well, it's not good enough, this second entry here was definitely 100% AAA quality. Yeah? You can see if I zoom in that the EMAs never crossed, they got very close, but then we had this very nice bearish candle, engulfing candle together with the stochastic crossover. Fantastic trade. So then this trade here happened, a rejection of the EMA 50 actually. And we didn't quite come from below 20, but again, this is discretion if you want to take this or not. At this point, you can move the stop from the first trade to break even and move it here. So you're at a small loss here. If it comes back -0.1, I consider this break even and scale in with the second opportunity. The same is true with the third opportunity here. Very nice trade. And then this one here as well. You could take this. Yeah, we are scratching the 50. However, again, our stop would be here, which would be a -0.5R for this one. So we can't take this. And then there are more opportunities here and here. And then there's one last opportunity here, which then we get stopped out with all the trades at the same time, basically. Yeah. So what we produced here from this downtrend, which lasted from June 2021 to March or April 2022, so 9 months roughly, is a -1, a 5, 6, 5, or 6, 4, and a 2. That's roughly 16 to 17R that we produced here, together with 2 losses and these 1, 2, 3, 4, 5 winners. Now the way you want to handle this is, of course, you don't only have one pyramid open at the same time. You have 5, 6, maybe 10 pyramids open on different stocks. Ideally, you want to have 5 long pyramids, 5 short pyramids open, and you want to have them diversified across different sectors and industries to have a nicely diversified portfolio. You could also sprinkle in some Forex and futures trades here, maybe gold or even stock indices work as well, even though you're adding up correlated risk, but that's up to you as your portfolio manager. You need to make informed decisions about the risk you want to take on. But all in all, that's how it works, right? So with this strategy, I highly recommend you trade it on the daily, weekly, and monthly charts. You can also trade it on the 4-hour, the 1-hour charts, but you're going to be sitting in front of the screen a lot. And I really prefer the portfolio management approach with this strategy. It works fantastically in trending markets. Then you will have sideways markets for a while where you take some losses. And then when it starts trending again, you will make another nice chunk of money. And that's pretty much how this whole strategy works. It is very simple, but if executed correctly, it is incredibly efficient. You are going to catch a couple of these pyramids per year, and it will make your whole year. And the other times, the trades will just be scratches. 10% of your trades will make 90% of your results. The other 90% will just cancel each other out. And that's simply how it works for pullback trading with trends. It is a fantastic strategy in my opinion. Enjoy managing your portfolio like this, and I'll see you soon. But don't forget to claim your free ebook before you leave. Just click the link below.